Today we are going to understand one of the most powerful forces in global finance, how the US Federal Reserve supplies money to America and how that decision affects the entire world economy and financial markets. From interest rates to inflation, from Indian markets to oil prices, from stock crashes to global booms, everything connects back to the Fed. So let's break it down simple. So what is the US Fed? The Federal Reserve or the Fed is the central bank of the United States. Its main job is to control the supply of money, keep inflation stable, make loans cheaper or costlier, protect the financial system. Think of the Fed like the brain of the world economy. When the Fed makes a move, every country feels the impact. How does the Fed supply money? The Fed doesn't print money physically most of the time. Instead, it uses three major tools. A. Interest rates. When the Fed lowers interest rates, banks can borrow money cheaply. They lend more, businesses invest more, people spends more, and economy grows. When the Fed raises rates, loans become expensive, spending slows, inflation drops. B is quantitative easing. This is the Fed's most powerful money supply weapon. The Fed buy government bonds and other assets from banks. When it buys this, it pays money to the banks. Banks suddenly have extra liquidity. Stock market rises. Borrowing becomes easier. Businesses grow. This is basically digital printing of money. C is reserve requirements. Fed can tell banks you must keep this much money aside. If it's lower this requirement, banks can lend more, money supplies increases. How Fed decisions affect the US economy? When the Fed increases the money supply, loans become cheaper, stock market rise, dollar becomes weaker, economy grows, inflation increases. When the Fed reduces money supply, loans become expensive, stock markets fall, dollar becomes stronger, recession risk increases, inflation decreases. Every boom and every crash in the US has some connection to the Fed's decision. How Fed decision impact the world? This is the most interesting part. A US dollar is the world's reserve currency. Countries buy oil, trade goods and store savings in dollars. So when the Fed changes money supply, it affects everything globally. When the Fed raises interest rates, money flows out of emerging markets like India, Indonesia, Brazil and goes back to the US because US bond becomes attractive effects. Foreign investors pull money out of Indian markets, Sensex and Nifty fall, rupees become weaker, import becomes expensive, global growth slows, countries with dollar debt suffers. This is why countries panic when the Fed hike rates. When the Fed cuts interest rates, money flows into emerging markets. Why? Because investors look for higher returns. So effects are Nifty and Sensex rise, global stock markets jump, commodity prices increases, dollar weakens, risky assets like crypto boom. This is why bull markets globally often start when the Fed returns dovish. How it impacts global markets? Stock markets. Fed cuts, global rally. Fed hikes, global correction. Example post 2008, biggest bull run in history. Commodity markets. Dollar strong, global commodity prices fall. Dollar weak, commodities rise. Bond markets. Fed decision change global interest rates. European, Asian and Indian bond yields all react instantly. Crypto loves liquidity. Fed printing is equal to Bitcoin rising. Fed tightening is equal to Bitcoin falling. It also has geopolitical impact. Fed policy is not just economics, it's a power. The US can influence global inflation. Strong dollar puts pressure on Asian and African economies. Countries like China, India and Russia try to reduce dollar dependence but still rely on it. IMF loans are also dollar linked. Global trade depends on US monetary conditions. The Fed indirectly controls the speed of the world economy. So whenever the Fed raises or cuts interest rates, prints money, tighten liquidity, you will see the impact on your market, your currency, your investments, and even your country's economic growth. The Fed is not just America's central bank, it is the central bank of the world. If you understand the Fed, you understand global markets.